Hey everybody, Boris. Welcome to the Calm Dollar Roundup for weekly technicals for January 23rd to 27th for Aussie dollar, dollar CAD, and Kiwi dollar. I think a very interesting story in the Calm Dollars because they have been the low volatility trade all the way throughout. They've been the much slower, much easier, much calmer move all the way through. But nevertheless, you are starting to see, especially in the Aussie and the Kiwi, not in the dollar CAD, but in the Aussie and the Kiwi, very much the move against the dollar as well, as the carry trade in some ways comes back. Now, we had a decline in U.S. yields, come back in U.S. yields, but I think the appreciation in the Aussie and the Kiwi has been far greater than the yield differential that that could account for it. Aussie has really moved very healthily, very strongly through that 75 level. And although many of the shorts really wanted to lay out the shorts against the 75s, my argument has always been that once it took out that level, you really want to be buying the dips. You do not want to be trying to find a top in this thing. And I think it looks to be very much a continuation trade all the way up to the 76 level. We do have, of course, Australian CPI coming up this week. If that provides any kind of hotness, that suggests RBA is going to just get a lot more hawkish as we go forward. In fact, some analysts, including Goldman Sachs, is actually predicting the RBA is going to go back into a hiking mode middle to the end of this year. And that certainly provides a nice big support level under the Aussie for the time being. So given the fact that China appears to have stabilized, the Australian data, certainly on the employment side, has been quite stable and substantial. The whole idea of Australian collapse has not yet come. I think for the near term, the Aussie looks pretty good to the upside. I will say this, though. On a global macro picture, Aussie is still very, very vulnerable. If we get into some kind of a confrontation with China, Australia certainly, and I mean by we, I mean U.S. gets into a confrontation with China because of the Trump administration's hostile stance, Aussie becomes a very, very easy proxy for all of those woes. So how much upside there is on a big macro long-term potential remains unknown. But for near term, the momentum is to the upside. That's the key thing. The near-term momentum is to the upside. You have to trade it to the upside. Conversely, dollar CAD, the momentum very much remains to the downside, or to the upside in dollar CAD, to the downside in the Canadian dollar, because the Bank of Canada was far more dovish than the market thought they would. They were even suggesting the idea of perhaps lowering interest rates. The Canadian economy is doing relatively well, although today's data was all very, very poor, small, very, very cold CPI, poor retail sales data, suggesting basically that the Canadian economy is quiet but struggling. The big problem here, what's interestingly enough, is that Canada could be a drive-by victim of the whole NAFTA renegotiation. Bottom line is the Trump administration is hostile to everybody, including the single biggest trading partner the U.S. has, which is Canada, because as a result of the whole NAFTA pressure against Mexico and the renegotiation of NAFTA, it puts all of the Canadian economy under enormous amount of danger, which is why I think another reason why the Canadian dollar is suffering quite seriously, and in fact provides a very interesting cross possibilities here for the next couple of weeks on a relative weakness basis, especially, and this is a key thing, if oil prices begin to start drift back down below the 50 handle. That's going to be a very, very key tell. So there's a couple of areas of weakness from which you can approach dollar CAD that could provide some interesting trades going forward. Kiwi dollar just following on a sort of a smaller, less momentum-based basis. The Aussie dollar to the upside, although 72 remains a very, very key resistance points here, with support now holding at 70. Let's let the ambulances go by. Just go into our Zen mode in New York City. Let them just pass by and take a look at the charts here in the cool, quiet calm of our reflection and see what I'm talking about here. I like the fact that we've had 4 straight days above the 75s. I like the fact that the momentum seems to be the upside. Yes, 76 is going to be the big resist point. Certainly, it's you know, former support becomes current resistance. The really big resistance is the 77. That's a really, really key level. But if it takes out 76, it could easily just kind of snowball to 76.50 before it finds, I think, more serious sellers. Therefore, I like this trade. I like this trade just simply on a buy to dip basis. Today was a hesitation move in Aussie. It did not move as much as you would think it'd need to against the dollar. Dollar weakened as the day came to a close. But Aussie is holding bid, and only a very strong flow back into the dollar which at this point is hard to imagine, but not anything is possible, of course, would negate this uptrend. What would spook me out of the trade completely would be a move below the 74s. Up until then, I would be a buyer of this whole move all the way scaled down to 74s, because ultimately the trend still looks to be to the upside, and there's potential here for 76, 77 as we go forward. On the Kiwi side, same kind of an idea, but a greater stall, a greater resistance, and it's certainly I think if anything, this could be a very interesting trade as well. If Kiwi busts through the 72s, it has scope now to go to 74, and it could be a relative strength trade. On the other hand, we'll take a look at this on the crosses. A stall here would suggest that Kiwi is going to correct more than the Aussie because it has a much greater resistance here. So it has a relative weakness against the Aussie as we go forward. And of course, the biggest relative weakness in the COM dollars is coming out of dollar CAD, which has performed much better to the upside, meaning the Canadian dollar has been very much to the downside, based upon the internal dynamics of what the BOC said and the weakness in oil. We found resistance at this 3,400 level, but if oil prices begin to dribble down, this 34 gets challenged again. And I think of all the trades against the dollar looks strongest against the CAD. I guess that's what I'm trying to say. So that means the Canadian dollar is relative weakness against everybody else. And that to me presents some very interesting opportunities that we'll take a look at in the cross section. So that's how the week shapes up. It's a mild anti-dollar move in the COM dollars. It's a buy to dip strategy in the COM dollars, especially the Aussie and the Kiwi. And it's a very interesting isolation of the CAD, because on its relative weakness trade, it offers some very interesting possibilities for crosses. Wish you guys the best of luck, the best trading. Boris, over and out.